Gopal Mahadevan, the CFO and Whole Time Director, Ashok Leyland, joins in to talk about the numbers. Thank you so much for taking time out. To begin with, what have the demand trends been like of late? Has the impact of inflation and higher fuel prices on consumer spending hurt the company's earnings?
Not yet, and I don't believe it will happen in certain sectors because I think the demand has actually been fueled by the higher two, three reasons. One is, the infrastructure spend that the government has been doing in the investment-led growth that the government has been looking at is actually helping. The second one is e-commerce segment has taken off very, very well, and there has been a demand for ICV trucks that has come from the e-commerce segment. Light commercial vehicles have done again well because last mile delivery has started to pick up a lot. We must understand that, over the last few quarters, maybe from end of last quarter of 2020 onwards, demand has been very, very weak. It has actually come off, and then after that, we have had 2 years of COVID, due to which there is a lot of pent-up demand that is coming in. Having said that, we should be watchful of the effects of inflation and higher interest rates because this industry does depend on, financing. So this is something that we'll have to look at. Again, on the positive side, buses, I think would be favorably impacted because of this, not because of the interest rates, but because of the opening up. Because, over the last 2 years, schools, colleges, offices have all been shut. So the demand for both intercity and intracity, transportation, bus transportation had become very weak. In fact, even as I speak, for the last financial year, the total industry volume for buses has been possibly about 25% of what it was in good years. So we are going to see bus demand coming back, which will be extremely useful and extremely useful for Leyland because Leyland is a very large player in buses.
How is the semiconductor situation panning out? Is the worst of the shortage now behind us, or is there pain for some more time?
I think like the impact of semiconductor is, the negative impact is waning. Last year there were two things that happened. One, there was a severe shortage, but over and above that, Taiwan had actually been, two large factories in Taiwan were also, I believe, affected by COVID, due to which there was a complete shutdown almost of semiconductor supplies. Now that has kind of eased. And you're seeing that capacity is being set up of semiconductor globally because there's a huge demand today. Everything that we use, right, it actually has a chip in it, including home electronics. So the demand for chips has gone up, and I think there's a huge capacity augmentation that countries around the world are doing. But having said that, we'll have to be watchful of this because in the geopolitical situation with wars, Ukraine war, we need to watch out how supply chains will get affected. But to answer your question for the here and now, certainly the semiconductor situation has eased a bit.
And commodity prices, if you just see them, the way they're cooling off, coming down, can we expect margin improvement in the coming quarters?
We are hoping that. We are hoping that because, this price increases have been, while we have been doing price increases, they have not been, they're not sufficient to absorb the increase in material cost. So we believe that reduction in the commodity prices, there has been a reduction in steel over the last few days, and we hope that that trend continues, will definitely impact the industry positively.
Okay, that's a good guidance. Margins are expected to improve in the coming quarters. You have the highest share in South India, in the southern region. How has that segment performed? What's been the contribution? Are you going to double down on it?
I think the southern region is, slowly starting to come back, but it is not yet, been at the levels of growth as the rest of the country. So I would again say that this is another opportunity for us, and we are hoping that the southern industry will start growing at a faster pace in the quarters to come.
Now, the net debt stands at about 720 crore rupees. Do you think we can expect zero debt in the next 1 to 2 quarters?
We'll see. I mean, it all depends. There's a lot of working capital movement, and then we may have to make some investments in capex. So you see, of course, it's a good thing to have cash in the balance sheet. But what we would need to look at is that we're generating positive permanent cash, which will help. But the debt situation is at a very, very comfortable, level today at 0.1 times, net worth. And we are hoping that, we'll be able to generate further cash flows.
Thanks very much for taking time out and joining in, giving us a view on the quarterly earnings. Let's